what are some of the pros of pre-IPO investing? Well, for one, you get to invest in next generation technology companies before they're public, right? You get to kind of potentially have the upside of a company when it's in its earlier stages with the potential to make higher returns. Also, you can invest in the companies you might be using every single day, right? In 2015, people were using Uber and they were using Lyft all the time. And the pre-IPO markets were a way for those investors to actually invest in the things they believe in and the things that they use every day. You know, the other benefit for pre-IPO investing is you get to invest like an institution. If you think about what the Yale endowment model looks like, which has been a very successful institutional investment model, they've got stocks, they've got bonds, they've got real estate, they've got all sorts of alternative investments. And then if you compare that to the typical retail investor's portfolio, the classic 60-40 model of 60% stocks, 40% bonds, is notably missing a lot of these unique, hard-to-access investments. And fortunately, pre-IPO investing gives the opportunity to have your pie chart look a little bit more like the endowment or Yale institutional model. So what are some of the cons or things to be aware of in pre-IPO investing? Probably the main one is illiquidity. If you make a pre-IPO investment, it's not the same thing as buying a share of NVIDIA, where if you decide later that day or later that month you would like to sell it and get the cash to use for something else. You might not necessarily be able to do that in the private markets. So illiquidity is a big portion of it. Another risk of pre-IPO investing is that there's far less information available for a retail investor to look at compared to a public company. You kind of think of buying a share of Google and there's equity research reports and tons of corporate filings out there, and you can go through 10Ks and 10Qs and all sorts of things. With private companies, that information is much smaller. Now, a good platform will ensure you see all of that public information, right, and aggregate it and collate it and summarize it for you. But it really just highlights the fact that you're going to be making this investment off of less information than probably the type of amount of information you would get if you made a public investment.